second 100 shares. The next two types of bid are limit orders and stop orders. Let's start with a limit buy order. When might you use a limit buy order? Maybe you're about to go on vacation, but have had your eye on shares of Boeing. I don't want to pay today's price, you say, but if the price drops to $100 while I'm away, then I'd like to buy 100 shares. A limit buy order for a price of 100 fills the bill. If Boeing shares drop to 100, then your limit order becomes a market order ready for execution. You either get the shares at your price or you don't get them at all, and you aren't bothered during your vacation either. If we flip the story so that you want to sell your shares if the price rises to your specified target price, then you want to use a limit sell order. You'd use a limit sell if you picked a profit on your shares that's big enough to get you to cash out. Suppose that you bought Boeing at $28 in the spring of 2003. That would have been great because it tripled by January 2007. Would you want to sell, or would you think it would go even higher? Again, you might want to decide in advance rather than risk an emotional decision. If so, then you can place a limit sell order to execute if Boeing reaches your target price. Let's change our vacation scenario a bit. You're still going on vacation and don't want to be bothered, but this time you already own Boeing shares, and instead of being optimistic about Boeing, you think the current price might be too high. You don't want to sell now, but if it falls below, say, $100, then you don't want to deal with the chance it'll fall even further. If it falls to $100, then you want out. This is the time to place a stop-loss order. If the stock price falls below your target, then your order to sell is executed. The idea is to limit your loss on a security holding. Some investors use limit orders as a way of deciding the biggest loss they can handle in advance. They don't want to risk making an emotional decision that they'll regret later, so they place limit orders beforehand. Now let's flip the scenario. Instead of your sell order being triggered by the stock price falling below your limit, you want to buy if the price rises to your specified limit. This is called a stop buy order, or sometimes a buy stop order. When might you want to use one of these? Why would you wait to buy until the stock price rises? On February 2009, Boeing traded at about $35, down from over $100 in just 16 months. You might think, man, I can't believe that slide. The long-run prospects for that company are just too good for that decline to last. I'm sure that it's headed back to $100. But you're not sure whether the stock will decline further before it turns around, and you don't want to buy now if that's going to happen. At the same time, you want to be sure to own that stock if it heads back to 40 because you're convinced that that would mean investors realize that Boeing has been undervalued and it's on its way back to $100. You're worried that you might let your emotions get the better of you. You're afraid that you might think, I'll wait until it falls from $35 to $25 and then I'll buy. Well, friend, it may never fall back to $25 and you may never buy. You can take some of the emotion out of your decision with a stop buy order telling your broker to buy if the price rises to $40. Limit orders do have their drawbacks. First, limit orders typically cost more than market orders. Second, short-term stock price fluctuations can trigger a limit order, and you can't predict these movements. The stock price might just barely move past the limit so that your order executes, and then the price can reverse back past the limit again. Third, you can't be sure that you'll get exactly your limit price. A limit order isn't necessarily executed at the limit price. No, a limit order becomes a market order at the limit price. We've already seen that the execution price for a market order can differ from the quoted price at the time it's actually placed. Limit orders are a class of orders that specifies a price. Another class specifies how long the order lives before it's canceled. One example